Good evening, students. Welcome to the live learning classes organized by Board of Studies ICAI. Today's evening, we are going to discuss on this topic called accounts and records under GST and payment of taxes under GST. So, students, before we start, as a protocol, please confirm you're able to listen and also you're able to see my screen properly. Also, for your information, when you log into your ICAI Board of Studies portal, in the notes section, you have all the presentation material till the previous session and today's session uploaded. Also, I have promised that I'm going to take you through a revision of the previous chapters, what we have discussed. What I would do, we will discuss on one Supreme Court judgment of 2 to 5 minutes till all students join and join for the discussion. I'll just share quickly this one Supreme Court judgment which I was talking to you the other day in relation to e-way bill. You remember e-way bill, I was explaining the concept why the movement of goods, the tracking of this particular document is relevant. I also made you to understand this aspect called section 155 under in GST law, where there is a burden on assessee to prove for eligibility of input tax credit. So this section 155 draws attention from e-way bill related point of view also, where input tax credit has to be established. Let me just clear this. So this entity called Ecom Gill Coffee Trading Private Limited, this is in relation to Karnataka. I'll just quickly draw you the allegations made by the officer in this particular matter. I'll read from here. The assessing officer disallowed the input tax credit claim for assessment year 2012-13 on the ground that dealers from whom Mrs. Tallam apparels have purchased ready-made garments have either got their registration cancelled or have filed nil returns. So here, the input tax credit for this particular entity has been rejected for the reason the suppliers, their registration has been cancelled or they have filed nil returns. The assessing officer doubted. Now, this is a moot point of ITC disallowance. Doubted the sale and the payment of tax on such sale of which ITC was clean. An appeal was filed by the purchasing dealer. So this benefit of doubt is a moot point for disallowance of input tax credit. So in this regard, Supreme Court had examined detail and they gave their final observations in relation to establishing the proof for claiming input tax credit. So here, the Honorable Supreme Court says that, in view of the above, for the reasons stated above, in absence of any cogent material, like furnishing the name and address of the selling dealer, details of the vehicle which has delivered the goods, payment of freight charges, acknowledgement of taking delivery of goods, tax invoice, payment particulars, etc. So the Supreme Court, Honorable Supreme Court have said, if you claim input tax credit, that alone is not sufficient. You have to provide any of these your corroborative evidences to prove that you are entitled for input tax credit. So this is one particular Supreme Court judgment, which is also relevant for most of us under GST law, considering section 155. I draw your attention to this particular case citation, Ecom Gill Coffee Trading Private Limited. So this is one particular Supreme Court citation. The other day when I was talking about e-way bill, I brought your attention. So students, I have promised that we will have a MCQ. We will have a revision on the previous aspects, all we have discussed so far. So let me come to my present MCQ paper. So it's what you can do. People who can download, it's well and good. People who cannot download, you can just read the question and you can just make in your working note true or false. Based on this particular discussion, Based on the questions, you can examine to what extent you remember the concepts and also you have understood the concepts properly. So to start with, question number 1. Unconditional exemption are mandatory in nature. True or false? Unconditional exemption are mandatory in nature. Answer would be true. Why? Because, let me just mark conditional exemption. I may satisfy, I may not satisfy. So conditional exemptions are optional. Unconditional exemptions are mandatory. I have to follow. If there is exemption given, which is unconditional, I don't have a choice to charge GST. Question number 2. Any entity registered under Section 12AA or 12AB of Income Tax Act 1961 are exempted generally and under GST. Let's take example of hospital, school, trust, society, charitable organization. So the question says, an entity registered under 12AA or 12AB. 12AA and 12AB, it is meant for charitable activities, are exempted generally under GST. What would be your answer? Answer is false. Reason? These entities are supposed to render the services which are in relation to charitable activities defined under exemption notification. Please remember, just having an income tax registration 12AA or AB is not good enough. I need to provide those services which are covered under the ambit of charitable activities. Only then exemption is applicable. Question number 3. Services rendered by a doctor on a retainership basis to a hospital for conducting any surgery or treatment of a patient for fees on professional basis shall be taxable under GST, exempted under GST. So a doctor, when a patient gets admitted to hospital, this doctor who does the surgery or who gives the treatment is not on the rolls of the hospital. He works as a consultant. Those consultancy charges collected by the doctor, is it taxable? Is it exempted under GST? Answer would be exempted under GST. Why is it exempted? Because it is a healthcare service. Because it's a healthcare service. There is a circular issued by the GST department for that particular aspect. Question number 4. Services provided by Mrs. ABC Tours and Travels in relation to pick-up and drop-off students, faculty, and staff are exempted under GST if the educational institution provides education providing services over and above higher secondary school. For an instance, assuming that this educational institution is providing services of, say, post-graduation above higher secondary school. So education institution providing post-graduation services. Is it exempted under GST? Answer would be false. Why? Only up to higher secondary school are exempted under GST. This is the reason. Then, question number 5. Healthcare services provided in a hospital where room rent provided exceeds rupees 5,000 are taxable. Question says, healthcare services provided in a hospital where room rent provided exceeds rupees 5,000 are taxable. True or false? Now, please remember, we have these room rent charges which are exempted by way of ICU, NCU, and ICCU. So these are all exceptions to this particular levy. The question says it is taxable. Answer would be because there are few exceptions to that. Not all room rents which are exceeding rupees 5,000 are taxable under GST. So one of the example we have is ICU. Let me just see if there are any doubts so far. Questions, please, students, please mark your answers in your working note. Wherever you have a different answer, wherever you come across a different answer from the question, what I'm giving you the answer also, please mark the question number. I'll explain the logic also to make you understand why is this answer correct. So if you have any different answers so far, please mark the question number. I'll clarify once again. So far we have covered 5 questions. Let's go on further. Question number 6. Services rendered by state government to a business entity is absolutely exempted under GST. True or false? Services rendered by state government to a business entity is absolutely exempted under GST. That means to say, the state government need not collect or pay GST, or the business entity need not pay GST. When I say this activity is exempted, it is neither chargeable in the hands of service provider nor chargeable in the hands of service recipient. Answer would be false. Reason? Please remember, there are 3 services which are taxable. One is your postal service, second is your transportation, third is your renting of immovable property. Like example, say there is a Karnataka Road Transport Corporation. When Karnataka Road Transportation, it is a undertaking by a state government. It rents a particular property to a particular business entity. Then that particular activity is taxable under GST. So when we talk about services by state government, central government, local authority, except 3 services, rest all are exempted under GST. So answer would be not all services are exempted under GST. This is the answer for question number 6. Then question number 7. Services by way of works contract of construction, erection, etc. to a single residential unit is exempted under GST. Please remember, works contract service in relation to construction of a residential unit is what they're asking. What would be answer? Answer is false. Reason, when we read this exemption notification, not all services are exempted. What they have said, only pure services are exempted. Only pure services are exempted. So here, when they say works contract includes supply of goods and services. Only pure services are exempted. So material portion, if anything is there, that would be liable to GST. So that's why the answer is false. Question number 8. Hiring of non-air conditioned contract carriage by firms for transportation of employees to and from work are exempted under GST. Hiring of non-air conditioned contract carriage by firms for transportation of employees to and from work are exempted from GST. What would be your answer? Answer would be false. Reason. Now, when they say hiring of contract carriage, please remember, I explained this question number 8. Wait, there is a activity of non-air conditioned contract carriage. Like this is called passenger transport service. Passenger transport services by a air conditioned contract carriage taxable under GST. Non-air conditioned contract carriage generally exempted under GST. When I was talking about this example, I gave this bifurcation example this way. Example number 1, hiring of motor vehicle. Example number 2, getting on to motor vehicle, not route and timings, not controlled by the service recipient. Now, this is where I was giving an example that, assuming for a moment, there's a company which is there far away from city, 60 kilometers. If the bus is coming, like if there is a contract carriage which is engaged just for pickup and drop, where the service recipient is not holding this particular motor vehicle, they just take the services of pickup and drop. In that particular case, this is exempt under GST. Alternatively, the company says, look, you pick up the employees from their house, drop at factory, you hold back in our factory till end of our working hours. After the working hours, you drop our employees back at home. Now, in this case, this activity of hiring a motor vehicle is taxable. I use their services. This way, the bus, it picks the employees, drops, and it goes back. So if there is a bus which is flying in between two different routes, I just ask them, so please engage my employees for pickup and drop them at a particular destination. So if I get into this particular hiring contract only for pickup and drop, not to possess any control, then it would be exempted under GST. Because this activity is, they say, the term they have used is hiring of motor vehicle, I would say this is a moot point which is taxable under GST. Question number 9. Transportation of goods by GTA in relation to transportation of salt, food grain, pulses are exempt from GST. Transportation of goods by GTA in relation to transportation of salt, food grains, and pulses are exempt from GST. True or false? Answer would be true. Answer would be true. Why? There are 6 activities which are exempted under GST law. Services provided by a GTA in relation to transportation of your pulses, food grains, rice, salt, newspaper, defense related activity, any calamity related material, all those are exempted under GST. So one of those 6 items is your salt, food grain, pulses, etc. When I gave this example, I gave example of big basket, where any food grains carried from the producing area or the paddy fields till this warehouse of big basket, those are exempted under GST. Question number 10. Legal services received by a business entity not registered under GST due to threshold limits specified under Section 22 of CGST Act are exempted from GST. True or false? We have discussed this aspect in relation to exemption provided under GST law, services which are exempted under GST law. So here the question says that legal services provided by a business entity, it should be legal services received by a business entity. And this business entity is not registered under GST. Why? Because they're enjoying the threshold limit of Section 22. For a moment, let us assume that, say, Namrata is a person who's doing a business activity. Entire her turnover in the previous financial year is rupees 6 lakhs. Because the threshold limit is 10 lakhs, she has not registered herself under GST law. So when she receives advocate services, does she need to pay tax under reverse charge? Or is this exempted? Answer would be true. It is exempted under GST law because services rendered by a advocate or a firm of advocates to an individual or to a business entity not registered under GST because of the threshold limit specified under GST law, it is an exempted activity. So answer for question number 10 is true. I'll pause here for a minute. I'll see if there are any questions so far. Neha is asking, sir, I'm not able to see your current recorded lectures. Neha, it's all stored in the repository of ICAI YouTube. If you visit ICAI YouTube, there you can find all the recorded sessions. Clear? So far, so good. I couldn't see any difference of answer. Students, you find any question where you get an answer not matching with your estimated answer, please mention the question number. I'll clarify the concept once again. Moving further, question number 11. A recipient of service. Sorry. I'll just change this. Provider of a service up to a sum of rupees 200 in excess of the amount specified in a tax invoice has a choice to determine the time of supply for such excess amount to be the date of issue of invoice subsequently. The question says that there is a service provider. This service provider has received consideration up to a sum of rupees 200 in excess of the amount specified in the tax invoice. Assuming for a moment, Rahim has issued a tax invoice for rupees 6,800 rupees. Now he received a payment from his customer for rupees 700 rupees. Now 6,800 is a value as per invoice. Since 200 rupees has been received excess, this time of supply provision says that up to a sum of rupees 200, Rahim can decide when he can apply time of supply. That means to say, subsequently, whenever he issues an invoice, that would be the time of supply. True or false? Answer would be false for the reason the amount specified under section 12 is rupees 1,000, not rupees 200. I repeat, the provision under section 12, under section 13, which deals with your time of supply, has specified any sum up to a sum of rupees, up to an amount rupees 1,000 in excess of the amount specified in a tax invoice. The time of supply can be determined to be this invoice issued subsequently. So here, this aspect of rupees 200 is covered under section 31 only for the purpose of clubbing all those services or goods for one consolidated invoice. Please remember, when we discussed this section 31 in relation to tax invoice, I gave this example of Excite batteries or Amaron batteries, where monthly AMC is collected for rupees 100. Every day, the engineer goes to say approximately 15 houses. There are 1,000 engineers who collect every day 15 into, per engineer 15 houses. 1,000 engineers into 15 into 100. This amount I cannot issue every time a tax invoice. What I can do, up to a sum of rupees 200, if the amount is less than rupees 200, I can pool all those activities. I can raise one consolidated tax invoice. But when I refer to section 12, when I refer to section 13, my provision says sum of rupees 1,000, up to rupees 1,000. Examination, MCQ questions, 30 marks is a weightage. It's easy to score, and that's the way to get past easily. Moving on to question number 12. For determining time of supply for goods, in case of reverse charge mechanism, only two factors, that is payment to the supplier, date of invoice, are relevant. Section 12, which deals with your time of supply for goods, they're saying that when you examine the time of supply for reverse charge mechanism, only two factors are relevant. What are those two factors? They're saying that one is in relation to the payment made to the supplier or date of invoice. So for services, how many factors? For goods, how many factors? Answer would be false. Why? In relation to goods alone, in relation to goods, three factors are relevant. What is the missing factor? Date of receipt. Date of receipt of goods. So in case of RCM for goods, I have three factors. The day I receive the goods, the security entry. Second, the date of invoice. Third, payment made to the supplier. 30 days relevant from there, whichever is earlier, that will be my time of supply. So answer would be false. Then, question number 13. Money collected from customers by way of interest, late fee or penalty towards delay in remittance of consideration is exempted from GST and time of supply provisions are not applicable. And time of supply provisions are not applicable. What would be your answer? Answer is false. Why? Now, when you read this particular question, there are two aspects connected here. One is the chapter on exemption. Second is time of supply. And third element to look at this is from section 15. We examine this particular question from exemption chapter, then time of supply provisions, then valuation point of view. Please remember, any consideration received in relation to an activity of deposits, extending loans and advances, or deposits where consideration received by way of interest or discount is exempted under GST. I repeat, any activity of extending loans and advances or deposits where consideration is received by way of interest or discount alone is exempted under GST law. First chapter, exemption. Classic example. When a company makes a fixed deposit, assuming ABC Private Limited made a fixed deposit for 10 lakhs. On 10 lakhs, every quarter, the banker makes a deposit related interest for 5%. So this money of 5,000 received every quarter is exempted under GST law. So here, this money collected from customer, is it in relation to the activity of extending loans and advances or deposits? Answer is no. This is the money collected for what? Delay in remittance of consideration. What they say? Delay in remittance of consideration. When I say delay in remittance of consideration, we travel to valuation provisions. Section 15. Under valuation, there is an inclusive clause, 15 subsection 2. Under 15 subsection 2, there are 5 elements I add back to my value of supply. What is that? Money collected by way of late fee, interest, penalty, by whatever name you call, in relation to the main consideration. If main activity is taxable, then this interest, late fee, penalty also shall form part of my value of supply. So in this case, assuming for a moment, say Neha has sold goods to, say, Balaji for a credit period of 30 days. The goods are taxable at the rate of 12%. Now, Balaji has defaulted to make the payment within 30 days. assuming he paid the money on 60th day. So Neha says, for this consideration, 30 days period which you have delayed, pay me interest at the rate of 12%. In that case, because the goods are taxable at the rate of 12%, even this consideration that is represented by way of interest, late fee, etc., when Neha collects the interest from Balaji, that point in time, this will be taxable under GST law. So here, my time of supply provision says that the day when I receive that particular money, that would be my time of supply. So here, there are 3 topics I read in this particular example. Moving on, example number 14. Incidental expenses. I think this is connected with your valuation chapter. Incidental expenses charged by the supplier to the recipient are relevant for computation of value of supply as per provisions of section 15. When I deal with my valuation, incidental expenses charged by the supplier to recipient are relevant. By the supplier to recipient are relevant for computation. Now, incidental charges, 15 subsection 3, there are 5 elements which needs to be taken. Any incidental expenses incurred, like incidental expenses, packing charges, commission, etc., incurred by the supplier or collected by the supplier from the recipient, that would form part of my supply. Answer would be true. Now, when we read this question number 14, what is irrelevant or when it will be false? Answer would be exception to this particular question would be Rule 33, where we talk about pure services, pure agent service. In case of a pure agent service, please remember I gave one example where a chartered accountant, when he filed ROC form on behalf of a client, so there is a form called NGT8 to be uploaded. So the ROC is collecting ₹500 as filing charges. When chartered accountant charges to the customer, he says, look, 3,000 is my professional fee. I paid ₹500 to ROC. That reimbursement claimed from the customer as a pure agent is irrelevant for my valuation. That shall be excluded from my valuation. Other than pure agent, all incidental expenses are relevant, shall form part of my valuation. Question number 15. Subsidy given by state or central government forms part of transaction value. Subsidy given by state or central government forms part of transaction value. Forms part of transaction value. Good. I can see answers from some of you. Rahim, Geeta, Viraj. Good. Good evening, Namrata. You're late. What would be answer? Subsidy given by state or central government? Answer would be false. Other than state or central government, subsidy will be forming part of transaction value. What was the example we have discussed? Assuming for a moment, say there is a laptop sold by a particular vendor. Say there is a particular company, a part of CSR activity. This company says, look, if you sell any computer to a student who is pursuing their, say, primary education, who is studying in a government school or college, let's say government school, give a 50% reduction in the value of supply. Assuming that vendor, there is an electronic shop who sells a laptop for 40,000. If the laptop is sold to a student who is pursuing their education in a government school, 20,000 will be collected from the student. Balance 20,000 is given by a company as a CSR subsidy. Answer would be, for the purpose of section 15, any subsidy given by central government, state government shall alone be excluded. Other than that, it will be forming part of the value of supply. Question number 16. Again, from valuation point of view, taxes paid under any other law for timing in force shall form part of value of supply. This is a statement given under section 15, subsection 2. TCS under Income Tax Act 1961 also has to form part of value of supply. True or false? Taxes paid under any law for time being in force shall form part of value of supply. TCS under Income Tax 1961 also has to form part of value of supply. True or false? Namrata, we are doing a revision for all the topics we have discussed till the previous session. This is just a recap of our previous discussions. Answer would be false. Now, why it is to be excluded? There was a circular issued in 2021 where they say TCS comes at the fag end. When I have to apply income tax TCS, only when I calculate basic value on the GST, when I get total invoice value, on this value, I can apply TCS under income tax. This becomes a circular reference. For that reason, the GST department, by way of a circular, they have clarified that any TCS to be applied under income tax shall not form part of my value of supply. So this is a exclusion for this particular 15 subsection 2. Question number 17. Discount extended to the recipient can be allowed as reduction from value of supply if the same is agreed upon duly as per a contract made subsequent to the supply. Question says that a discount is given to a recipient. It can be allowed as a reduction from value of supply if there is a contract for giving that particular discount and this contract was made subsequent to making a supply. So what would be our answer? Very, very repeated question. Again, like when you read your NCQ students, valuation, exemption, your input tax credit. These are the 3 core topics where 5 into 2, 10 marks, where 3 questions will be set for 30 marks. Pretty important from your examination point of view. Unless you know the concepts, it is not easy to solve these particular problems. So answer would be false. Why? For the purpose of section 15, subsection 3, when I want to give a discount is covered under 15 subsection 3. Under this particular provision, they say on or before supply. Please remember, my valuation provision says that any discount extended by way of a contract which was discussed on or before supply, I have to give this particular discount as per a contract which was entered prior to making a supply. In the given question, they say this is after contract made subsequent to supply. Supply took place after the supply, the contract was made. In that case, the discount is not allowed for deduction. So answer would be false. Question number 18. Value of supply in case of a related party transaction is deemed to be the transaction value where recipient is not entitled to pay input tax credit on such supply. Examination, be alert, read the question 1 to 2 times, read the English. These are pretty confusing also. Value of supply in case of a related party transaction is deemed to be transaction value. They're stressing deemed to be a transaction value. Deemed to be a transaction value. How? Where recipient is not entitled to avail input tax credit. Answer would be false. Why? When recipient is entitled, then this deeming fiction is correct. I repeat, my deeming fiction of transaction value is correct only when a recipient is entitled for availing input tax credit. If the recipient is not availed for input tax credit, then I fail with this section 15. I examine open market value, like kind of goods. If not, I travel to rule 30 for applying or for adopting my value of supply. So answer would be false. Question number 19. Where price is not the sole consideration, value of supply shall be derived on the basis of cost of production plus 10% due to lack of open market value or value of like kind end goods. True or false? Question says, where price is not the sole consideration. Section 15, when we read value of supply, it says, what is a transaction value? Transaction value is value where price is the sole consideration and it is not between related parties. So if it is a transaction where price is not sole consideration, I will set aside my transaction value. I'll travel to my valuation rules. Rule 27, Rule 28, Rule 29, Rule 30. 27, where price is not sole consideration. If I don't have open market value, if I don't have like kind and goods, what will I do? I'll travel to Rule 30. So this cost plus 10% is derived as per Rule 30. Answer would be true. Answer would be true. Last question for the day. Value of supply of second-hand goods shall be nil if the sale value is less than the purchase price where no input tax credit has been availed. This is again picked up from valuation provisions where Rule 32 talks about 5 different scenarios how to determine the value of supply. We have discussed about air ticket booking, insurance, purchase and sale of second-hand goods, then your foreign currency transaction, right? So one of them is purchase and sale of second-hand goods. Value of supply of second-hand goods shall be nil if the sale value is less than purchase price, where no input tax credit has been availed. Answer would be true. Why? In case of second-hand goods, purchase value minus sale value. If it is positive, that will be value of supply. If the purchase minus sale is negative, then there is no value of supply. Means I need not pay GST. This would be my answer. So students, these are the MCQs which have set from previous topics connected with your exemption, valuation, time of supply, related provisions. Right? Let me see, before I start with today's topic, let me see if there are any doubts. Geeta is asking one question, one doubt. Sir, when a staggered discount is given, bulk purchase discount also is given. In relation to discount, Geeta, please remember, you may have a contract where you may examine month-on-month purchase and give a discount on a staggered basis. It is okay. But the primary requirement is before the supply takes place, you get into a contract. Don't make a supply and to get the money in a faster manner, then you get into a contract. Section 15 says only one thing. For the purpose of deducting the value of supply, let there be a contract. And this contract should be on the date of contract or prior to the date of contract. This is the primary requirement. Hope I have clarified, Geeta. Now let's start with our today's discussion. We are at 6:45. Today's topic, I'm going to explain you the concept of accounts and records under GST, payment of taxes, various cash ledger, credit ledger, computation of interest under Section 50, mechanism of utilization of your input tax credit, TDS and TCS provisions under GST. So why do we read these provisions, or how these provisions are relevant for me. I would put it this way. First and foremost, assuming that you have to give a proposal to your client for what? Say, maintenance of records under GST law, maintenance of registers under GST law. That is your bookkeeping. So here you have to, or I would say, retainership. This particular chapter will give you an overview where it will make you to understand what is that we have to speak to the client when we have to explain them what is GST and how the records and registers needs to be updated or maintained. For the purpose of filing returns under GST, this particular accounts and records is a primary requirement for the purpose of filing returns. So from this particular backdrop, this is going to be helpful. Then payment of taxes, when I deal with this particular payment of taxes, you have audit under GST. Also, you have refund under section 54. For this particular two provisions, it will help us to understand under what circumstances, what tax I have paid, I can prove to the GST officer. Also, when and how my refund under section 54 can be claimed. So these are the two connecting chapters where this particular learning is going to help us. From here, let's start with our today's discussion. Section 35 under GST law, read with Rule 56 under GST law, where it helps us to understand, it makes us to understand to maintain inward and outward register under GST. What do you mean inward and outward register? Purchase register, sale register. Stock register, not applicable for composition dealer. So this particular chapter explains us what documents are required in relation to stock inventory. Accounting for advances under GST law. Tax details, input tax credit, output tax credit. Vendors, customers details, your suppliers and your customers. Details of place of storage of goods, where all material have been stored, in the process of your business. Finally, production details under GST. Now, please remember, students, this is a macro coverage from section 35, read with Rule 56. Now, when we have to read this particular chapter, you would have covered your internal audit and statutory audit. Internal audit, the focus is different. From management point of view, what management is expecting, you would do an audit. Statutory audit point of view, you always examine true and fair disclosure. Right? Now, this is an objective for internal audit. This is an objective for statutory audit. But please keep in mind, students, when we do a GST audit, my GST provisions expect true and correct books of accounts. So there is a huge difference: internal audit perspective, statutory audit perspective, GST audit perspective. When I talk about stock registers, your AS2, which deals with your inventory management, is it compulsory that I have to maintain stock register? Probably. Based on your accounting policy, you would have defined, in the process of my business, I maintain inventory for these items. I don't maintain inventory for these items. Like example, say, let's talk example of motor vehicle repair unit. Let's assume that Rahim, for a moment, is a dealer who purchases and sells motor vehicle. Also, he has got a garage where he do a repair activity of motor vehicle. Now he purchased spare parts in the course of furtherance of business. So when he buys spare parts, I could maintain inventory, I need not maintain inventory. Example, nuts and bolts, oil, grease, or small minute items. When there are minor items where I cannot maintain inventory, like example, when I do a service of a motor vehicle, I apply a grease for a particular clutch plate. Now I apply say 10 grams of grease. I don't maintain any registers for that. So when I buy 50 kgs of grease or 50 liters of oil, I don't maintain inventory because I consume on a random pattern. AS2 comes into picture. When you talk about inward and outward, your purchase and sale register. Purchase and sale register. The disclosure of your purchase and sale, especially when you talk about this, export and import, EXIM, export and import. When you prepare your notes to accounts, where you talk about import of goods, export of goods, foreign currency earned, foreign currency expended, money earned in foreign currency, money spent in foreign currency. All these are the information relevant where the GST provision say maintain true and correct of your books of accounts. Every element I'll explain how when an audit under section 65. Section 65 deals with audit under GST. You as an expert, you as a professional under GST law, makes the GST officer understand, so what is your GST law is explaining and what is that you are asking. Like many cases you would have come across where the GST officer who comes for the audit, he says, look, you give me your tally backup. I'll take the tally backup to my office. I'll do the review of your books of accounts. Please tell the GST officer, my dear officer, section 35 has ample guidance. Nowhere section 35 says the accounting records and registers, the software backup needs to be given to the GST officer. That is my proprietary item. There is no authenticity for the GST officer. Probably income tax. Income tax, there is a specific provision where a search and seizure conducted by an income tax officer, they would take into custody all those records and registers which they believe would have a information relevant for their investigation. But unfortunately, under GST law, this backup of your software is a irrelevant aspect. So please keep in mind, only those records and registers specified under section 35, they have an authenticity to question, authority to verify. So you'll refer to provisions of section 67, which deals with your inspection. Arun Cheche sir is going to cover this particular section 65 and also section 65, provisions of audit and assessment. You'll get better clarity connected with this particular chapter. Now, the other day, I promised you that I'll show you a registration certificate. When we were talking with respect to registration, I believe Namrata asked this question. Sir, relevant date, when I apply for registration, say voluntary registration, I applied on 15th of October, the officer sanctioned my registration, say from 18th of October. What is my relevant date? Now, if you, this, I don't think, I try to capture the image. This is my typical registration certificate where period of validity from to, and there is a serial number called date of issue of certificate. Look at this. My you cannot see this. I'll just write for your better understanding. Date of issue of certificate is written as 26th September 2017. And this validity, it says it is valid from 1st July 2017. So my registration certificate is going to have validity from and the day when officer has sanctioned my date of certificate. Where do I use this particular provisions? Concept of tax invoice under section 31. under section 31. When I read section 31, there's a concept called issuing a revised tax invoice. Revised tax invoice. So here, 30 days from 26 September, I can issue a revised tax invoice. For what period? For this particular period. July 17 till September 17. Whatever invoices I have issued during this particular period, I can issue something called revised tax invoice. So this is one aspect I wanted to show you. Moving further. One another aspect. When you look at RC, there is something called principal place of business. Serial number 4, address of principal place of business. Address of principal place of business. Next page, I have captured only one page. There is something called additional place of business. So your registration certificate always carries principal place of business, additional place of business. Please keep in mind, students, these two are relevant when you do a GST audit. So why is this important? I'll give an example. Pretty important example. Let us take example of a trader of steel. Let me give example of Mumbai. In Bombay, you see getting a office space of 30 by 30, 900 SFT is pretty costly. Now, assuming a trader of steel, this particular person does a business of 50 crores rupees, 50 crores for a particular financial year. Now, when you do audit for this particular GST assessee, the first question should come into your mind. The registration certificate shows a particular place of business which is just having 900 square feet. There's a business done for 50 crores. Now, when I want to stock a particular steel, when you look there, balance sheet, when you look at current asset, assuming that there is a inventory for rupees 20 crore, the question should come into your mind. His address is just 900 square feet. 20 crores worth steel can definitely not be stored in this 900 square feet. Now, this is how your basic understanding of accounting records and registers starts with. So when you try to understand the business of an assessee, first and foremost, you start your audit by inspecting something called registration certificate. Students, I'm making all these provisions in a general manner where you can understand these concepts. I'm not focusing too much on section or rule specific. Rather, I'm making you the content of this particular provision to understand. When you go back and read this particular provisions, it will be easy. I'm not running through your institute material. Rather, I have made a particular pattern how the provisions can be explained so that you can understand this as a story when you go back and read your book. My job is to make you understand the concepts for your better future. Now, under section 35, accounts and records, the provision says that section 35. Every register person has to maintain production or manufacture of goods, inward and outward supply of goods and services, stock of goods, input tax credit availed, output tax payable, and such other particulars as may be prescribed, wherein Rule 56 come into picture. Now, when I talk about such other particulars as may be prescribed, there could be a reference to documents and registers which is not specific under section 65, probably rules formulated by a commissioner. Rules formulated by a commissioner. When I start reading section 35, it says every registered person. Now, end of this section 35, there is a power given to a commissioner for formulating rules, such particulars as may be prescribed, wherein you will come across a policy decision with respect to warehouse or a transporter, wherein I don't catch hold of a registered person directly. I catch hold of a registered person indirectly by virtue of powers conferred under clause F. When we travel, I'll make you understand these provisions. So as on today, these 6 provisions are prescribed under section 35. And provision says that all these registers have to be maintained at principal place of business. Also, at every additional place of business. Let me see if there are any questions before we go further. Anish is asking this question. Sir, in MCQ 19 regarding Rule 27, if open market value is not available, then we need to consider sum total of money and monetary value of consideration, not in money. So the statement will be false. Now, open market value is not available and value of like kinds and goods is also not available. Then I travel to Rule 30. Now, your answer is valid. Sir, if I have money in, what you can say, in consideration and not in consideration. If you have value of goods, then I'll adopt Rule 27. If that is also not available, then I will travel to Rule number 30. So your answer, your understanding, Anish, it's fairly good enough. Rahim is asking this question. Sir, can 2 places be registered as a principal place of business? Not possible, Rahim. Like you have your ROC. For Companies Act purpose, there is only one place which is notified. There is only one place which is notified as your registered place of business. Even for GST purpose also, there is only one place which is permissible as principal place of business. Hope this is clear, ma? Yeah. My records and registers for the purpose of section 35 is true and correct. It's not true and fail. 1 mark MCQ. And these registers can be maintained either manually or in electronic form. It can be maintained manually or in electronic form. Then moving further. Books of accounts under GST, additional information when they refer to rule number 56. Rule 56 says that, look, moving further from what is prescribed under section 35, first and foremost, details of goods or services imported or exported. Imported or exported for the purpose of section 16 to claim input tax credit, for the purpose of section 16 for calling a zero rated supply, section 16 for input tax credit. So when I want to claim input tax credit, you have to refer to your document called Form GSTR to be, where all my goods on which I have paid customs duty I'll have details auto-populated for input tax credit. So they say maintain a additional information for goods which are imported. Also, services for what? For payment of tax under reverse charge and availment for the purpose of Section 16. Now, when I talk about services imported, please remember self-tax invoice under Section 31. Under Section 31. This is important as per rule number 36. All these provisions, when you read together, when you want to claim input tax credit, what is required? Bill of entry. When you want to claim input tax credit for services, what is relevant? My self-tax invoice for payment of tax, also a document relevant for rule number 36. When the goods are exported out of India, how do you claim the benefit not to charge GST under Section 16 of IGST Act? Section 16 is under IGST and this Section 16 is under CGST. So the rule says that for the goods and services, you need to maintain a separate register. This is where your activity starts. So when you talk with the client as a GST consultant, sir, let me do a due diligence. Now, I'll go beyond the subject for a moment to draw your attention post-qualification. How do you use this particular knowledge? As a professional, you can conduct a due diligence for the purpose of investment related activity. So as a part of due diligence, what you will do, you conduct a detailed verification of books of accounts. You'll say, get me your financials. There is a reference to notes to accounts. Some goods have been imported. Some services have been imported. Money spent in foreign currency. Now you'll ask, have you obtained this, what you call, form 3C, this one, 15CA CB for foreign remittances. Now, have you issued self-tax invoice? Now, the moment you start questioning, like you have a detailed checklist. So you have, for particular goods and services, around 15 questions. Now, the client will say, yeah, this person has got a value. Isme dam hai. He's charging me 5 lakhs for doing due diligence. Just like the client is not going to pay you. You need to make an elaborative checklist by reading these provisions one to one. So this is how it is going to help you post-qualification for due diligence act. And supplies attracting payment of tax on reverse charge along with relevant documents. So connected with this first point, any RCM, when I say reverse charge, Section 9, subsection 3, Section 9, subsection 4 under CGST. Relevant 5 subsection 3 under IGST, 5 subsection 4 under IGST. So here, notified list of goods and services and the construction related activity. So if you have paid under reverse charge, please maintain a register. You maintain the details date wise, supplier wise information. And they say also give the information of documents. Give the information of documents. Now, what documents they are saying? Invoices, bill of supply, delivery challan, credit note, debit note, receipt voucher, payment voucher, refund voucher. All these are the documents which are referred in table number 13 of GSTR 1. Table number 13 of GSTR 1. If you would have filed GST returns on a monthly basis, you would have asked the client, sir, please give me from which invoice to which invoice you have issued for the month. Of this series, how many invoices are cancelled? If you have multiple series, like example, Rain was asking one question. Can I have 2 places for principal place? Answer is no. Assuming for a moment, I'm an automobile dealer. I'm an automobile service center. For cars sold, I use one series. For service related activity, I use another series. So when I furnish details of invoice, one series for goods, one series for services, I would mention in my invoice. Bill of supply, in case there are exempted goods, again, I maintain a separate series for that. So here, all these documents are compiled for the purpose of filling this particular table 13 of GSTR1. While filing GSTR1, if I fail to furnish this information, this is a non-compliance. Most of us not read thoroughly all tables in GSTR1. When I like next topic in the next week, I'm going to touch upon returns under GST. I'll make you run through all these forms and fields, how it is connected with your books of accounts. Stock details. Now, this is one data which is required by a registered person. They say details of goods are received and supplied. Details of goods received, that is inward, supplied, that is outward, in and out. What is it they're asking? Opening balance, receipt, supply, loss, stolen, destroyed, written off. These are covered under provisions of section 15. Section 17, subsection 5. Under section 17, subsection 5, input tax credit, Arun Charges has covered, blocked credit. Blocked credit. So when there is a block credit under 17.5, the goods which are lost, stolen, destroyed, write off. Disposed by way of gift or free sample. All these are covered under section 17, subsection 5. Balance of closing stock. So this data they're asking us to maintain. For what? Raw material, finished goods, scrap, and waste thereof. This is an expectation from section 35, read with rule 56. So when you do an audit, what you'd ask, so please give your inventory registers. Whatever goods which are sold, what you can do, you pick sample a particular item where inventory is maintained. For this particular item, you can ask from 15th June 23 to 30th June 23. Give me the stock GL. Give me stock GL. When you look at the stock GL, you can see debit, credit. Debit is for stock which was received. Credit for stock which has gone out. So wherever there is a debit, that should be by way of a purchase. So when there is a purchase, every debit, there will be a reference to purchase journal or purchase voucher. For every credit, there will be a sales journal or sales voucher. In connection to this sales voucher, probably there could be a adjustment or adjustment JV or a simple journal voucher. Why a simple journal voucher? Goods lost or stolen or destroyed or goods written off. I do a physical stock audit, books data, inventory compared with physical data. When I have book data as per inventory records, I have a closing stock for 500 units. But in a physical count, I have received only 480 units. There is a gap of 20 units. This gap of 20 units, I write off using a journal ledger through credit entry. So in case if there is a journal ledger where there is a credit entry posted, that particular item calls for blockage of credit under section 17, 5 for input tax credit if availed. This is the irrelevance of my stock records. Please keep in mind, this particular provision is not applicable for composition dealer. 1 mark MCQ question. They'll ask, Mr. X, a registered person under composition, or Mr. X, a registered person under section 10, is into activity of trading of particular items. He pays GST at the rate of 1% of the turnover declared. He does not collect GST from any customer. On inspection by a taxable proper officer, it is noticed that Mr. X has not maintained inventory records for raw material traded. Is there a violation of GST provisions? You will see that your section 35 read with section 35 read with rule 56. This inventory registers to be maintained for a composition dealer is not applicable. This would be your answer. Next. One of the complicated subject is in relation to advances. Just give me a minute, student. Advances is one another area where there is a challenge in relation to maintenance of books of accounts, passing the journal entries, and disclosure of that or reconciliation of this aspect in your GST returns. Most of the time, chartered accountants are the only professionals sought for service sector. I'll give an example of a hotel industry, or I would give example of a service industry. Let's take example of a hotel business. I could have, because hotel business is little easy. Instead of hotel business, I'll give example of it's a professional service. Professional service. Professional service where there could be customer 1, customer 2, customer 3, customer 4. Customer 1 and 2 are having same PAN. Customer 1 is from state 1. Customer 2 is from state 2. Customer 3 is from state 3. Customer 4 is from state 4. Now, when money is received in advance, first and foremost, I have to examine whether this is for service or goods. Assuming it is not for goods, it is for service. The next question comes, is your nature? Is it your intrastate or interstate? Now, assuming for a moment, if it is a continuous supply, where month 1, month 2, month 3. Month 1, I have received advance for rupees 1 lakh. Month 2, I did a billing. I have issued a tax invoice for 40,000. Month 3, I have issued a tax invoice for 50,000. Now, the challenge comes here is way to disclose this in GSTR 1 and in 3B. Month 2, how do I adjust? How do I show this particular tax invoice as B2B in my GSTR 1? And adjustment of this advance with this particular tax invoice. Also, adjustment of this advance with this tax invoice. Now here, I have, this is just one example, students. Assuming in a particular month, I have 30 customers from where I have received advances. Every month, assuming there are 2,000 invoices issued. 2,000 invoices issued. Where you need to keep a track. Now, this 30 advances, when I say, probably, when I give a breakup of this 30 invoices, 20 invoices are interstate, 10 invoices are intra-state. 20 invoices are interstate, 10 invoices are intra-state. Now, this is a complexity of my accounting. Which month I have received, when did I raise a tax invoice, correlating this tax invoice with the monthly advance. So this is one area where GST law is expecting maintain a detailed register for advances received, advances paid, adjustment. Advances received, this is for billing purpose. Advances paid, this is for RCM purpose. This is for section your income. This is your expense. Time of supply for this, time of supply for this. Please keep in mind, accounting is accounting. Post-qualification, this is one area you're going to face challenges in the process of bookkeeping. This is the expectation. Also, my rule 56 says that Rule 56 says that in addition to your tax invoice, in addition to advances, in relation to your inventory, please maintain a register where tax invoice, credit note, debit note, delivery challan issued or received during any tax period for details of tax payable, details of tax collected, input tax, paid input tax claim. They are asking you to give us a record. I already mentioned there is something called table number 13 of GSTR1. Also, I draw your attention from GST law. Prior to GST, there is something called Central Excise Act. Central Excise Act. Central Excise. Central Excise. Where we had something called RG23 1A, RG23C. This is for input and input service. And this is for capital goods. Where we used to maintain a detailed register, serial number 1, like serial number, the date of accounting entry, the date of invoice, registration number of seller, the taxable value, HSN or service accounting code, tax paid, place of supply, and address of the seller, and date of payment. I maintain a detailed register for my purchases. Similarly, detailed register for sales. When I export my sales register, now please keep in mind, all of us feel, sir, I have ERP, I have SAP, I have Tally. Click of a button, my tax sales register, my tax purchase register is exported. Do you have this information? Please read rule number 56. Rule number 56. Post qualification, how you are going to use this particular knowledge. There is a SAP which gets implemented. There's an ERP which is going to get implemented. You, as a professional chartered accountant, you're going to adopt this particular section 35 in rule 56 provisions. At the time of configuration, you will give to the ERP vendor. Look, when you give a sales register, does it have all these columns relevant for my GSTR1 purpose? When I receive advance, how do you reconcile my current liability with this particular advances received, advances adjusted, balance advances pending for adjustment? Now, there is something called GST annual report. Do you have a software or do you have the data where all this information can be generated in relation to these documents which are connected with tax payable forward charge, tax payable reverse charge, tax collected and paid, tax collected and paid. As a seller, how much is tax I have collected and how much is that I have paid? As a buyer, how much is the input tax credit availed on forward charge from a seller in India? Input tax claimed under reverse charge. Input tax availed, input tax claimed. Input tax, this is availed. Out of this, how much is claimed? Now, when I say availed and claimed, now there could be cases in scenarios where I have accounted purchases. Say in a particular month, 40 purchases are accounted. 40 purchases are accounted. Of this, 32 purchases are appearing in form GSTR to be. 8 are missing. So what happens here? When you look at your balance sheet, current asset, input tax register, my balance of input tax credit available as per books vis-a-vis my balance available in electronic credit ledger. Please keep in mind, students, GST officers have not read this law in detail the way these provisions are written. Once you get qualified, and if you don't, like most of us have a tendency to take accounting service. Please keep in mind, compliance job, accounting service job is a pretty complicated job. The easiest job is a consultant job. I audit, I review, I verify, say, yes, your books of accounts are okay, your books of accounts are not okay. Now, for this purpose, having a knowledge of systems or information technology is pretty important. My recommendation, along with this particular professional course, if you can add the technology as a additional qualification, I would say you have a better future as a career point of view. Do your SAP course, do your master's in advanced Excel, wherein you can play around with information technology. Please, come out with a traditional way of being a chartered accountant. Moving further, let me just see if there are any doubts before I go further. There's a question from Rahim. Sir, in the month of October, one of your classes did not happen due to a technical issue. Will that be conducted? Okay, Rahim. Okay, thanks for bringing this to my knowledge. There was some internal scheduling of classes where a communication didn't happen, because of which I have not conducted, or rather I have not taken a class. Let me check with the institute and come back on this one. So sorry, there was internal communication issue because of which a class was scheduled, but I couldn't take that input tax credit. So let me have a word with the Board of Studies, and let me just come back on this particular point. Namrata is asking this point, what to be recorded in production and manufacturing records? Good. In production and manufacturing records, Namrata, when you look at, like, I don't know how many of you have seen the ERP production data. In ERP, wherever there is a production data, you ask for production dump, where you have batch-wise in a day, how many units are produced. Like if you see, in the production area, they maintain a detailed records, how many units are produced, okay, not okay. And how many units are okay, that will be sent to finished goods location. That is your inventory. The same goods physically move from production area to inventory area. You will see a entry in your ERP. There will be a batch. Like, in a day, assuming that, let's take example of, say, nuts and bolts. In a day, assuming that 10,000 bolts are manufactured. This 10,000 bolts would have been manufactured in 2 shifts. Again, in 2 shifts, you have shift 1, shift 2. In shift 1, you would have batch 1, batch 2, batch 3, 3 batches. Every particular production, they have batch wise. So you'll see on the packing slip, this particular batch, say B001/NOV/13/P1. Now they have this November, 13th November, P1, P2, P3. P1, P2, P3 is pre-lunch, A1, A2, A3. This is after lunch. There could be a coding how your journal gets posted in your ERP. So you look at these entries and you will compare that vis-a-vis your closing stock, Namrata. Stock manufactured, opening stock manufactured in sale or journal entry for section 17, closing stock. This closing stock which has come from ERP, you will verify with your physical stock. This is what expected from section 35 point of view. Moving further, section 35 says, whenever you prepare your sale register, purchase register, please maintain the details of seller. Please remember that Ecom Gill Coffee case, the Supreme Court judgment. Today beginning, I started with this particular case law edition. The Honorable Supreme Court said that the sellers from whom you have received the goods, please maintain the details. What is his address? What is his GST number? What is his tax invoice? what was the date of tax invoice, IGST, CGST, XGST. In addition to this, if you have received the goods by way of transport, please keep the track of transport bills. Also, the EV bill against which the goods have been purchased. This is expected from your Rule 56. Also, in relation to your customer, that is your buyer. Now, there is a Rule 88 which talks about your blocking of input tax credit. Blocking of input tax credit. I believe Arun Chajja has covered this Rule 88, but again, for brevity, today I will touch upon Rule 88, where my input tax credit will be blocked by recommendations made by a commissioner or a proper officer, where the GST law says, to whom all you have sold your goods or to whom all you have rendered your services, maintain the complete address of that particular person. Also, in case of goods, your transport LR copy, where you say goods are dispatched. Also, details of e-way bill, etc. I'll give one example where recent audit and assessment, where this Rule 56 was examined. There was one particular trader who is a steel trader. Steel trader. This particular trader was from, let me just hypothetical example, I'll say Tamil Nadu. This particular trader has shown that he has availed input tax credit to the extent of 250 crores as input tax credit and 320 crore as output tax credit. Now, the GST officer has questioned that, look, I have got to know that some of your suppliers, like they say 3 vendors are not existing. 3 vendors are not existing. The GST officer have said, out of the suppliers, 3 vendors are not existing under GST law. By virtue of this, they say that for these 3 vendors, to the tune of rupees 120 crore, I will block your input tax credit. I'll block your input tax credit. Now, we as a professional, when we represented the assessee, we say, my dear good officer, you have examined provisions of section 155 and you say, I have a burden to prove that I am eligible for input tax credit. I will give you address of my seller. I'll give you the invoice of my seller. I'll give you the bank statement where all payments made to my sellers are also forthcoming. I'll also give you the e-way bill details against which the material have been received. Beyond this, please don't expect anything. The officer say, look, you have this vendor, right? This vendor has got another vendor. The GST officer has asked, along with this vendor, the vendor of this vendor, for this also, you get the details of invoices. I said, look, to just give little example in a better fashion, assuming that Namrata is one vendor. Namrata sold this material to Rahim. Rahim has sold this material to Anish. I repeat, Namrata sold to Rahim. Rahim sold to Anish. The GST officer has caught hold of Anish. And GST officer say, look, we got an information that Namrata is a defaulter. Now, GST officer has blocked the credit of Anish. Anish said, sir, my vendor called Rahim, he has filed his GST returns. I don't know who supplied the goods to Rahim. If Namrata has defaulted, who is the seller of Rahim, please don't ask me. Section 155 or Rule 56 only talks about my vendor. It doesn't ask about vendor of my vendor. So in this case, if Rahim has purchased from Namrata, please don't ask me. I don't have a control on Rahim. What Rahim has sold me, I can explain. This is what we have taken a stand. Students, we are at 7:35. Let's have a 10 minutes break and resume back at 7:45. from this topic called accounting records and accounting accounts and records under GST, where I gave this example of a seller, right? Let's move further from here. Now, this is one tricky provision where under Rule 56, they say, if I don't disclose my place of business. Now, see, having a place of business, I'm supposed to register under GST. And having registered under GST, every place of business I need to specify. This provision says that if any taxable goods are found to be stored, if any taxable goods are found to be stored any place other than declared in Sub-Rule 5, without the cover of any valid documents, proper officer shall determine the amount of tax payable on such goods as if such goods have been supplied. Now, I'll give an example to understand this provision. Say, I am a trader. Door number 315 is the place where I have a shop. What I do, I buy and sell steel products. Door number 315, I have used for my business purpose. As the time progresses, I expand my business. Now, over a period, there is a constraint for space. Assuming that in one street apart, at door number 176, I have a small warehouse. Most of you, when you go to this market where you buy these goods for wholesale purpose, you will see that the shop owner will give you a particular product, and if you ask for another variety, then this Chotu, the office boy, that fellow will run, he will get some other 2-3 items. From where he'll get? From a warehouse which is stored, which is there apart. Now, this particular door number 176 should have been added in RC as additional place of business. But like most of the businessmen doesn't care for the GST complaints or even for tax complaints. It so happens that if at all, if the GST officer comes for inspection, if these taxable goods are stored where at door number 176, other than declared in the Sub-Rule 5, then proper officer shall determine. Now, whatever inventory is there, on this entire inventory, it is presumed that this trader has already supplied the goods. And on this particular inventory, whatever is tax is there, that will be collected as tax due but not paid. This is tax due but not paid. The officer will say, I will not consider that as your inventory. I presume that you have already sold those goods on which you are supposed to pay tax but not pay. So this is one ramification of me not adding all my additional places of business in my registration certificate. Now, this is where your stock audit comes into picture. Most of you, when you do your stock audit, you do from bank point of view. You do from internal audit point of view. You do from statutory audit point of view. One more angle is your GST perspective, where you will say, as per registration certificate, where should I have stored the goods? But where did I store the goods? So did I took a special permission? Did I added that as an additional place of business? All this comes into picture. Moving further, maintenance of registers. They say that all the registers, whatever you have maintained, can be maintained in electronic form. New amendment in ROC, MCA with effect from 1st April 2023, any accounting registers, any records maintained in electronic form using this particular software, you should have a mechanism to have data backup in India. Also, you should have audit trail for any documents edited or altered or deleted. So here, GST law provisions also have similar provisions. Any accounting registers which are maintained in electronic form shall not be erased, effaced, or overwritten. Like we have this tendency, Control D, Alt D. Now in Tally, most of us have the common tendency. Delete some entry if sales register is not matching. Like you have prepared some workings, GST rate in this file. When audit is being done, you have 32 lakhs as per Tally, you have 30 lakhs as per GST returns. 2 lakhs is extra, delete 2 entries. Please keep in mind, all this data which is deleted, like the officer will say, do you have an audit log? Do you have an audit trail? Please show me whether you have maintained. If yes, how many vouchers are altered? How many vouchers are altered? They would ask for this electronic registers. Manual registers, whatever physical books you have maintained, that they will verify. This is what they are expecting. Any small mistakes in physical records, which are clerical in nature, you can overwrite and you can counter law, maintain a authorization for that correction. Now, this is another gamut of being a chartered accountant, taking a responsibility and burden. Most of you, as an article assistant, you would have come across this scenario. I'll read the provision and explain you what exactly this provision is trying to explain. Unless proved is my catch point. Unless proved, otherwise, if any documents, registers, or any books of accounts belonging to a registered person are found at any premises other than those mentioned in the certificate of registration, RC, they shall be presumed to be maintained by the said registered person. They shall be presumed to be maintained by the registered person. What is that? These documents and registers maintained at a premises by this particular registered person. Now, you would have come across, in case if there is an inquiry from income tax department, say there is an email mismatch between your PAN number, like you filed a quarterly TDS return, there was a notice saying that short deduction or mismatch PAN. Email forwarded to the chartered accountant. Auditor साहब मेल आ गया, कोई कुछ गलती हुआ है, आप देख लो क्या हुआ. There is an inquiry from GST department. Auditor साहब कुछ डेटा मांग रहे हैं, आप देख लो. There is an inspection from income tax department. Call to the auditor's office. सर ये ऑडिट वाले ना सेल्स का डेटा मांग रहे हैं, आपके पास फाइल है ना, वो भेज देना मेरे ऑफिस में. There is an inspection from GST department. They are asking for purchase bills. सर हमारे पास कुछ नहीं है, हमारा ऑडिटर नम्रता जी है, हमारा ऑडिटर ये रहीम जी है, उनका ऑफिस में जाके ढूंढ लो. Now you are giving an open door. Anything and everything a client is asking, client says, सर वो हमारा चार्टर्ड अकाउंटेंट है ना, उनके पास है. Now this rule 56 says that unless proved, it is presumed that this registered person has maintained all his records at your office. So my advice is, you don't carry entire registers. Like, when I do a accounting service, I take a big responsibility, as a big brother. What I'll do, सर आपका ना नोटिस इनकम टैक्स से कोई आया रहे तो आपका एड्रेस में कोई भी नहीं है लेने के लिए, ऐसे करो, हमारा बिल्डिंग के सामने आपका नेम बोर्ड लगवाओ. Why? Any notice, no? Let it come to my office. We add our office as a registered place of business for the client. Now, this is the extra services we do to look good, not to look bad. We are over obliged from the client point of view. So here, provisions say, any registers found at the chartered accountant premises, unless you prove, who proves? The registered person prove, then it will be considered as a additional place where these registers and records are maintained. What is the implication? Section 67. Section 67. Whenever there is an inspection, be prepared along with your client. Entire GST department is going to come to your office. This is the ramification of maintaining sales register, purchase register, debit note, credit note, journal voucher, tally for that moment. These days, you have all this accounting software where you have a remote system. You ask the client, sir, आप tally खरीद लो, आप ना रिमोट एक्सेस दे दो, हमारे ऑफिस में बैठ के एंट्रीज हम डाल देंगे, आप मेरे को टैली मत दे दो, टैली का बैकअप आपके सिस्टम में रखो. So please advise the client, don't maintain the tally backup in my office. I'll ensure the tally backup is in your office. This is expected under Rule 56. So unless you prove, it is presumed that the CA's office also is going to be an additional place for the purpose of maintenance of records and registers. Now, in case of an agent, principal agent conduct, very simple. Rule 56 says that, look, you have been appointed as an agent. Where is your agreement? Please show me all those agreements. As an agent, whatever goods you have received or whatever goods you have supplied, please maintain a separate register. Why? When you file your income tax return shows only your commission income. When you file your GST return, it shows little more higher turnover. So all those goods collected, all those inventory which is available with you, please maintain a register to say whose principal's material is this particular goods or service, goods pertaining to. Details of accounts, how much is the money paid in advance, how much is the money to be paid to my principal. All my bank transactions pertaining to principal, maintain it separate track. Tax paid on receipts or on supply of goods or services on behalf of a principal. Now, see, when you read all these provisions, as a chartered accountant, the scope is much, much, much beyond a mere bookkeeping, mere accounting. We as a professional chartered accountant, we feel, sir, no, accounting means debit and credit. So I'll take the accounting job. All the bills whichever come, my junior will file. I'll just do the debit credit, prepare trial balance, prepare schedule to financials and give it to client for signature. No, there is an income tax responsibility. There is a GST responsibility. They expect more and more detailed registers to be maintained. Now, this is all additional complaints from complaints point of view. Now, for works contract. Works contract, this made very, very simple. Look, this is a complicated business model. For this particular works contract business, there are pretty simple expectation. First, maintain the details of persons on whose behalf you're doing the works contract. So first, they want a list of the people or the clients on whose behalf you receive money or you're doing this works contract, where we will have all the locations available in this particular register. Now, importance of this, you'll understand when you travel to your GST law. Sorry, when you do audit under GST for works contract. Maintenance of input tax credit, project specific, like in your CA curriculum, GST provisions in related to real estate are not there. These real estate provisions come into play when you read this Rule 56 carefully post qualification. So first, I need to maintain client-wise, location-wise, the projects which are being executed. Description, value, and quantity of goods and services received for execution means what all material I have purchased for this particular project specific, ITC project specific, reversal project specific, consumption project specific. So this consumption also they're asking you to keep a track. Payments received in respect of each works contract, money received in advance, money running bill raised, GST paid, balance amount lying in your balance sheet as current liability. Last but not least, this is one area susceptible for fraud and suppression. All the suppliers from where you have purchased material, please remember this e-com grill case. All your provisions of section 155, burden of proof, as much as possible, maintain that track. One takeaway from here, students, when you go back and do audit, please advise your client. Whenever you do purchase audit, whenever you do internal audit, along with the tax invoice, so where is the e-label? So where is the security entry? Where is the transporter LR copy? If available, maintain that data. Also ensure your supplier is a regular GST filing supplier. All these are the aftermath provisions which you come across post qualification. Now moving on, section 35, ancillary provision. I was talking about policy matter. Every owner of a warehouse or every operator of a warehouse or a godown, owner or a operator, either of these people, what they say, these people, every owner or operator of warehouse or godown or any other place used for storage, I store material, and every transporter along with this owner, along with this operator, a transporter. These three people, the commissioner will notify and give a responsibility. What is that? Irrespective whether he is registered or not, the transporter, the godown operator, or the warehouse owner may be registered, may not be registered, but they shall maintain records under section 35. When you start reading section 35, every registered person shall. Now, we block saying that because it is only for registered person. When we travel further, indirectly on behalf of registered person, these people are mandated to maintain records. For what? Records of consignor, consignee, consignor, consignee, and other relevant details. What is that other details? Other details in relation to goods transported, goods delivered, goods in transit, GST number of consignor, consignee, consignor, consignee. Every owner or warehouse operator shall maintain books in respect of these information for a particular period, which would be remain in this particular warehouse. They say, please keep an audit trail from where material have come, into the warehouse, to where this material is going out, and the motor vehicle used for this particular transportation, registration number, the document used for transportation, the description of the goods mentioned thereof, all this information I have to maintain. This is expected under this particular warehouse. And they say, this warehouse operator, etc., they can use a form called ENR01 for the purpose of enrolling themselves if they are not registered under GST. And for transporter, I gave the other day example of VRL. If VRL under Rule 138 have registered all the states and union territory, they use a form called ENR02 for generating something called unique enrollment number. Why is this unique enrollment number required? Because when Part B of e-way bill has to be assigned, if I have, say, 33 GST numbers of my seller, I don't know which number I have to select. Rather, it's easy for me for selecting UEN. I'll give one live example where we use this UEN. Let's take example of Asian Paints. Let's take an example of Asian Paints. Asian Paints, say from Maharashtra, they have, say, warehouse from Maharashtra, warehouse in Tamil Nadu. They have warehouse in Maharashtra, warehouse in Tamil Nadu. From Maharashtra, say 14 states, the delivery happens. From Tamil Nadu, say 8 states, the goods are delivered. And all this 14 plus 8, say 22 states, there are 300 goods transport agencies registered with this company. I'm telling you the practical scenario how the business happens. So here, now assuming from Asian Paints point of view, for a moment, say one of you, let's assume that, say Anish happens to be a complaints in charge. Now from Anish point of view, when the vehicles are moving out of the factory, this every registered person, every GTA, so more or less registered in 20 plus states. Now, identifying the vehicle number, identifying the state from where the vehicle has come for giving the service, it's pretty complicated. So for my ease of doing business, when I fill Part B, I use this unique enrollment number of the transporter, based on which my Part B gets assigned to the transporter. Once this is assigned, internally the VRL company will start assigning, okay, this is from Rajasthan, this truck is from Tamil Nadu, this truck is from Udaipur, or this truck is from, say, Gurugram. Based on the truck number, based on the state, they internally assign which vehicle has to take care of these transportation. This is the way where my ENR02 is going to be used. This I have discussed. Now, last provision connected with accounts and records, time limit. Not time limit. Where the registered person fails to account the books, accounts of goods or services in accordance with section 35. Proper officer shall determine the amount of tax payable on the goods. Now, failure to account. I'll explain this provision by way of an example. Say, there is a warehouse. This is my warehouse. There is an inspection under section 67, where the proper officer has come for inspection. The moment he has come for inspection, he said, show me your raw material, show me your finished goods. As per ERP, say, as per ERP, as per physical. ERP shows 300 pieces for a raw material. Physically, I have 320 pieces. My ERP says finished goods is for 400 pieces. But actual physical goods, I have 450 pieces. Now, what happened here? My book stock is less than. My book stock is less than physical stock. Now, what does the provision say? Where the registered person fails to account. Where is the failure to account? Probably there is a failure at production entry, or there is a failure at dispatch. What is the dispatch? Like it is a clerical error. While sending the goods, I have to dispatch 300 pieces. By mistake, what I have done? I have dispatched only 240 pieces. This is billed quantity. This is dispatched quantity. Happens. These are all clerical errors prone to happen. Fortunately or unfortunately, the day you dispatched billed 300 pieces, your ERP comes down by 300. But physically, you dispatched only 240 pieces. What happened here? 60 pieces, there is a failure to maintain books. Then proper officer shall determine amount of tax payable not accounted as if such goods had been supplied by such person. So the implication is wherever there is a mismatch in your inventory, it is deemed that tax ought to be paid but not paid under the provisions of 73 or under the provisions of 74. 73, normal provisions. 74, fraud, suppression, misrepresentation. Fraud, suppression, misrepresentation. Period of retention of books of accounts, very painful. Income tax, ROC, ESA, EPF, GST. And that too, GST, this is very, very pathetic for the reason there's no control on annual return. Every year, 17, 18 onwards, it was extending. So the law says that until a period of 72 months from the due date of furnishing of annual return, whatever is the due date for furnishing your GSTR 9 and 9C, from there, 72 months, that is 6 years, you have to maintain your books of accounts. 6 years. Clear? This is my general books of accounts. So what happens if in case there is a litigation which has gone beyond 72 months? For example, pertaining to financial year 2017-18, 17-18, say there is a demand from the department. For this demand, I have made an appeal directly to High Court. This traveled to Supreme Court. Example, ARP and Co. Chartered Accountants case where they have challenged whether GSTR 3B is written under Section 39. Now, assuming for a moment, my normal period for 2017-18, for 2017-18, hypothetical example, say 31st 31st December 2022 happens to be the deadline. Now, on 15th June 2023, the verdict of High Court has came. Now, read the second paragraph. A registered person who is a party to appeal or revision or any other proceedings. Appeal or revision covered under section 107 and 108. Arun sir is going to cover these appeal and revision provisions or any other proceedings before appellate authority or revision authority. Appellate tribunal, section 112, not yet formulated, or a high court, 116 towards high court. Any of these provisions, then they say, the assessee shall retain books of accounts or other records for a period of 1 year after final disposal. Here, assuming that High Court is assuming for a moment, this is not there. High Court is a final verdict, which came on 15 June 2023. Up till 14th June 2024, my books of accounts for financial year 2017-18 have to be maintained. This is what the GST law is expecting me to maintain. Unfortunate provision. Now, like when law is mentioning that this is a time limit, we don't have a choice. Rather, we have to oblige with the policy matters. We cannot challenge. Let me see if there are any questions before we go further. Rahim, I had a cross check during the break. This one session which you are referring, Rahim, it seems this is already assigned and covered by Arun sir. So that is not going to be there anymore. Input tax credit related provision. So it was already covered. Students, hope the discussion is going on well. I don't see any questions. When I see questions, I feel you are in tandem with my explanation. If questions are there, concepts are being understood. So if questions are not there, either you are in front of the system, the audio and video is going on, you're not understanding anything, or you have understood the concepts where there are no doubts. If it is a second element, I would be the happiest person. So if you have any doubts, let me know. If you are understanding the concepts, whatever we are discussing, the pace of discussion, the way the concepts are being discussed, if it is okay, please confirm so that I'll continue in the same pace, the next topic which we are discussing. Let me have inputs from some of you who are listening to me. Is the discussion going on fine? Is the pace, is the speed okay? Good. Now, to start with payment of taxes, examination point of view, you will have input tax computation of input tax, computation of output tax, where 2 marks will be allocated from this particular chapter, payment of taxes. Calculation of input tax, calculation of output tax, and then netting of these two aspects and payment of taxes. This is what covered in your examination. Thanks for the confirmation, Aniket and Rahim. Now, I'll make you to understand electronic cash ledger, electronic credit ledger, electronic liability ledger. We are all experts in tax provisions. So ECL, ELL. ECL is into 2 categories. One is cash, one is credit. ELL is liability. ELL will have a debit balance. Electronic cash ledger and credit ledger will have a credit balance. Now, these are the ledgers like your bank account. Liability will have a debit balance, credit ledger will have a credit balance. Mirror image of our books of accounts. My output tax will have a credit balance as per books of accounts. As per books of accounts, my output tax, ELL is nothing but my output tax or tax due. My books will have a credit balance. My electronic cash ledger will have a debit balance. My electronic credit ledger will have a debit balance. This is a mirror image of my bank account, which is also there in my GST line. Utilization of input tax credit. I was referring to rule number 88. I'll make you understand this provision. Also, I'll make you understand this concept of section 50, read with section 50 subsection 3, which is a very, very important provision which has been amended or brought into effect retrospectively. May 2024, wait and watch one examination question from Rule 88B, read with section 50 subsection 3. I'll explain you this provision as I travel through another 20 minutes from now. Basic definitions: input tax. Input tax in relation to a registered person. If a person is not registered under GST, no input tax credit. If a person is registered under GST, then ITC. So for a registered person, what is ITC? It means central tax, state tax, IGST, UGST on any goods or services made to him, and includes IGST charged on imports, tax payable under reverse charge under 9394. So they say all these elements, including goods which are imported, tax which is payable under 93 or 94. All this comprises of input tax. Tax payable under 5354. This is IGST reverse charge provisions. Tax payable under 9394. This is CGST provisions. Now, look at here. Tax payable under 9394. Tax payable under 5354. Tax payable under the provisions of 9394 of respective state. So here, CGST, SGST, IGST for reverse charge. Tax payable under 7374 of UGST. This is also RCM, but does not include tax paid under composition levy. Any tax paid under section 10 is not entitled for input tax credit. Output tax. Most of you would have this question. Can I not use input tax credit for payment of RCM? Most of you would have come across this question. Can I use my input tax for the payment of RCM? The answer lies here. In relation to taxable person, it means the tax chargeable under the Act on supply of goods and services, both made by him or by his agent, but excludes tax payable by him under RCM. Please keep in mind, ITC can be used for only for payment of output tax. For this simple reason, RCM cannot be paid using your input tax credit. Outward supply in relation to taxable person means supply of goods and services, where whether by sale, transfer, barter, license, etc., made by the person in the course of furtherance of business. This is your regular sale or service. This I'll skip. Now, starting point. Payment of tax, interest, other aspects. Amount available in cash ledger may be used for making any payment towards tax, interest, penalty, fee, or any other amount payable under the provisions of this Act. This we are referring from section 49 point of view. Now here, let me just introduce one slide to explain in detail. cash ledger, credit ledger. Please remember, this you will come across down the line once you get qualified. You join a company as a CEO, CFO, or general manager of finance. There could be circumstances where audit under section 65, there is a demand. There is a demand for tax, interest, penalty, or late fees. Late fee because you have not filed the returns in due time, or under section 60 or 61, not 60, 61, say 75. There could be a demand of tax mismatch, or under section 129, say penalty for e-waybill related contravention, or maybe there is what else you have, audit is done, verification of returns under 70, any notice, any show cause notice under section 73 and or 74, not N or 74. There could be a demand of tax, there could be a demand of interest, there could be a demand of penalty, there could be a demand of late fees. Now, these are the modes of demand which may come across in GST law, right? In any of these cases, you prefer to file an appeal. When you file an appeal, when there is a amount of tax in dispute, then there is something called pre-deposit. Currently, pre-deposit of 10%, 10%, 20%. There could be any of these demands which comes into picture. So here, what is that you're looking at? You're looking at tax, you're looking at interest, you're looking at penalty, you're looking at late fee, or you're looking at pre-deposit. GST law says that if tax alone, I can use credit or cash ledger. If any of these elements you have to pay, then you should use mandatorily cash ledger. If demand of tax alone is there, I can pay through electronic credit ledger, I can pay through electronic cash ledger. If demand is in account of interest, penalty, late fee, pre-deposit, then mandatorily I have to use a cash ledger. So that's what they say. Amount available in cash ledger may be used for payment of tax, interest, penalty, late fee, or any other amount. What is this any other amount? Pre-deposit. Amount available in credit ledger may be used towards output tax alone. What do you mean by output tax? Tax on outward supply. Tax on outward supply, which does not include your reverse charge mechanism. Only for the purpose of your output tax, I can use my credit ledger. Amount in cash ledger, this is just summation of what we have learned all along. Setting of input tax credit. Now, this is initially 2017, 18, 18, 19, 19, 20. These 3 years, we were asked multiple questions in GST CA final. Now, everything is automated. We have come across this stage. Basic provisions, what does it say? My IGST can be used only for the purpose of first IGST. Then if any balance is there, I can use it for CGST. Further, if balance is there, I can use it for SGST. Similarly, the input tax of CGST, I can use it for payment of first IGST. Balance, I can use it for CGST. But C cannot be used for state GST. Similarly, state GST, first I can use it for payment of IGST, then for the payment of SGST. But the state GST cannot be used for CGST. Crisscross, state and central cannot be permissible. State GST for central GST for state GST is not permissible. Now, when you're using your SGST to pay IGST, Section 49 says that first exhaust CGST. Whatever central tax is there, exhaust. Then this central GST for the purpose of IGST. After that, you can use your state tax for the payment of integrated tax. I repeat, IGST should be paid. This IGST to be paid. Now, IGST is to the central government, right? Union government. So first, step 1, I use existing IGST input tax. Step 2, I use CGST for payment. Then, if any balance is there, I use SGST or UTGST. Assuming IGST I have to pay is 1 lakh. My input tax on account of IGST is available for 20,000. Exhaust that 20,000. Then from CGST, another, say assuming 30,000 ITC is there. I'll exhaust 30,000 input tax credit for paying IGST. 50,000 is paid. Balance, assuming in as state GST, I have say 30,000 balance. This 30,000 can be exhausted. So balance 60 plus 20, 80. Whatever balance 20,000 is there, this will be paid through cash ledger. This is the mechanism where the section 49 says how to use your state GST before a setting of IGST before central tax. Now, so what happens? I have a balance in cash ledger. I have a balance in cash ledger or credit ledger. Balance in cash ledger, balance in credit ledger. After paying the tax or interest penalty, whatever be them, then under section 54, I can claim a refund. Refund, there is a separate session where we will discuss in detail under what circumstances refund is entitled, how we will claim a refund from cash ledger or credit ledger. Liability ledger, this is maintained either by the assessee by virtue of return filed under 39 or by the GST officer when he conducts an audit. Let me see any doubts before we go further. Namrata is asking this question. Sir, can one place become principal place of business for two proprietors? Practically, no. Practically, no. Very interesting question. And this is what we come across day to day. I appreciate your question, Namrata. Assuming door number 121. Door number 121, say Aniket has taken a registration. Later, Rahim applied for registration. Later, Namrata applied for registration. Now, Aniket, when he applied, state GST officer approved. Rahim, when he applied, central GST officer approved. Later, Namrata again applied. State GST officer approved. Now, when officer is approving, they don't know. At door number 121, Aniket came, vacated. Rahim came, vacated. Namrata came, vacated. They don't know. Probably, same landlord got into an agreement with Rahim, Aniket, Namrata. Now, that could be a scenario where three people at same point in time having same place of business. Now, this is the reason where at times the GST officer come for physical verification of premises. Legally, it is not correct, Nandata. Right? Now, liability register, liability ledger, very, very simple provision. I don't file returns in timely manner. Late fee gets populated. I file return, but belatedly, interest gets calculated and populated in liability ledger. I file return where my output tax in GSTR 3B is less compared to GSTR 1. Again, that liability gets populated in my liability ledger. Audit is conducted by GST officer. Audit officer has demanded some tax, demanded some interest, demanded some penalty. That gets again debited in liability ledger. So this liability ledger is maintained in PMT01 where all my activities, it's like, we call, what do you, Papa. All papas done in this particular life, whatever karma we do, because of our karma, we get a credit of our punya and papa. So this balance sheet of punya and papa of electronic liability ledger is on account of my act of delay in filing of return, my act of short payment of taxes, my act of non-filing tax returns, or any audit conducted by the GST officer, everything comes and gets auto-populated. I don't know anything. It's updated automatically. Now, how do you do a prakshalana of your papas? I assuming that for a moment, if in Hindu culture we have this belief: if you go to river Ganges, take a dip in river Ganga, all your papa of this yuga or this particular incarnation gets cleared off. So in this GST law, using a credit ledger, using a cash ledger, whatever balance is there, that gets cleared by crediting this electronic ledger by debiting respective cash or credit ledger. Section 49, subsection 8. I'll give an example to understand this particular payment of taxes. Let me just insert one slide. Say, look at my, I'll maintain this way. Books, GSTR 3B, IGST, CGST, SGST, IGST, CGST, SGST. Month 1, I have purchased, wherein my IGST is 100 rupees, CGST is 50 rupees, SGST is 50 rupees. In GSTR 3B, my virtue of GSTR return on matching principle vis-a-vis GSTR 2B, I have taken 80 rupees, I have taken 30 rupees, I have taken 30 rupees. Month 2, again, there is a purchase for 60, 20, 20. If you look at the credit for month 2, say I have, again, on matching basis, I have availed, say 60 for current month and 20 pertain to last month. 80 rupees. And 20 pertain to current month and balance 10 pertain to previous month. This is how I have accounted. Now, what is happening here? My books has got a credit of 70, 70, 160. My electronic credit ledger has a balance of 160, 60, 60. Now, these are the balances available. Assuming for a moment, this is for, say, financial year 22-23. There's an audit which is conducted for financial year 2017-18. During the audit, there is a demand of tax. There is a demand. There is a demand. How much is the demand? So there is a demand of 40 rupees for IGST, say 20 rupees for CGST, 20 rupees for SGST. Right? Now, my output tax for month 2. My output tax for month 2 is 80 rupees. And for CGST, say 30 rupees. For SGST, 30 rupees. Now, this is a scenario which I was talking through. Now, when I have to pay tax, during month 2, what I can do? What I will do? I'll say tax due for month 2. Tax due for 2017-18. My tax due for month 2 is 80 rupees. It is 30 rupees, 30 rupees. Similarly, tax due, my tax due for month 2, sorry, I have written correctly. My month 2 should have come here, where it is 80 rupees, 30 rupees, 30 rupees. My demand of tax for financial year 17-18 is 40 rupees, 20 rupees, 20 rupees. Now, 80 plus 40, 120. How much is the balance in credit ledger? 160. 30 plus 20, 50. How much is the balance in credit ledger? 60. 30 plus 20, 50. Balance is 60. So my balance in electronic credit ledger is available. Then what is the order for payment from electronic credit ledger? This is explained in section 49, subsection 8. They say that every person shall discharge his tax and other dues under this act or rules made therein in the following order. This is the following order. Self-assessed tax and other tax dues relating to previous tax period. They say self-assessed tax and other dues related to returns of previous tax period. Then self-assessed tax and other dues related to return of current tax period. Then any other amount payable under this act or rules made under demand under section 73 or 74. This is by way of a show cause notice under 73, 74. So here, when I travel back to this example, when 160 rupees is there, what I will do? Step 1. Tax due for month 2, I'll use. Step 2. Demand for previous year, I'll pay. So whatever 160 rupees is there as a balance, first I will exhaust my current month liability. Any balance, then I'll exhaust previous month, any demand under section 73 or 74. This is what I will do. This is what I will do. So here, whatever 160 rupees is there, first I'm exhausting 80, balance 60 rupees, 80 rupees, I'm exhausting here. Now, assuming this is a case where my balance is higher. If balance instead of 160, just hypothetical assumption, if the balance available is only for 50 rupees. So what I will do? Out of 50, first I'll pay for this month to 50 rupees. Balance 30 of this month, I'll pay through cash ledger. This is what generally we do in relation to payment of taxes. This is explained in section 49, subsection 8. I'll see if any doubts are there before we go further. Aniket says it's like virtual address taken. Yes, Aniket. This is no case where I'm not supposed to take a registration, but I have forcefully taken for the example what Namrata was telling. Let's go further. No doubts in this regard. I believe Namrata asked this doubt, incidence of tax, where I explained this instance of tax could be from seller's perspective, could be from buyer's perspective. Seller's perspective, the tax should not be burden to customer. Buyer's perspective, the tax should not be added to cost of operation. This is what I have to prove. Law says every person. When I say every person, this every person could be supplier, could be a recipient. I'll give an example here. Every person who has paid the tax on goods and services or both under this act shall, unless the contrary is proved, by him, it will be deemed that to have passed on the full instance of tax to the recipient of goods or services or both. I'll give an example of example 1 of a real estate. Example 2 of a manufacturer. Real estate, say 15th April 23, GST is paid on advance. GST is paid on advance. Say rupees 20,000. GST paid is rupees 20,000. 20th May 2023, refund voucher is issued. Why? Customer came back, sir, I paid you advance, please give me back my money. Now, in this scenario, the government says, look, who paid the tax? Who paid the tax? Government says, customer paid to the service provider. Service provider in turn has paid to government. Now, when a refund application is filed, who can file a refund application? It will be filed by, say, service provider. When refund application is filed by the service provider, government says, unless you prove that service provider has not paid to customer, why government should refund? In the sense, government says, assuming I give a refund of this 20,000 to service provider, what is the guarantee that this service provider is going to pay back to the customer? Now, look at a policy point of view. This is called your instance of tax. So how do I prove this instance of tax? Now, what happens? Visualize your accounting entries. When, in this case, like I gave example of, say, Rahim, he paid this 20,000. So, assuming for a moment, Aniket happens to be a real estate agent. Aniket, when he pays this 20,000 back to Rahim, Aniket says, debit money recoverable from government, credit cash or bank. This money recoverable from government should have been shown in my balance sheet. This is from service provider point of view. Now I'll come to example number 2. Example 2 from manufacturer perspective. Manufacturer purchase raw material, do process addition, and then export. Export without payment of tax. Without payment of tax. On this purchase of raw material and process value addition, input tax credit paid gets accumulated in balance sheet. Now, the GST officer says, look, I wanted to give you a refund. Prove that the tax paid on your purchases, tax paid on purchases, have you not included in your cost of goods sold, COGS? That means to say, government is asking, you as a manufacturer, assuming you paid say 1 lakh on your raw material and process, you exported the goods. I, as a government, when I give you a refund, what is the guarantee that you have not factored this 1 lakh tax into your cost of goods sold and recover even that 1 lakh from your customer? For that, again, you will say, my dear officer, please visit my balance sheet. My dear officer, please visit my balance sheet. In my balance sheet, please visit current asset. I have shown that whatever money I have paid to my seller as input tax accumulated in current asset. I'm asking you to refund that money. Please give me that money back. This is the concept of incidence of tax. Examination. 4 marks theory question on incidence of tax. Final. Please wait and watch whatever be the questions which could be tested. Like no, there's no right mechanism. This is the pattern which questions will be asked. Incidence of tax, give 2 examples. Probably that could be tested. There are some questions. Aniket is asking this question. First utilized for previous, then current, then 73, 74. Yes, Aniket, you are absolutely correct, ma'am. Whatever order under section 49 is there, first you pay to current previous tax, previous month, then pay for current month, then audit under 73, 74. Or current, then previous. Aniket, I repeat this way. Whatever tax declared in your return pertaining to previous tax period, pay that. Then whatever self-assessed tax for current month, pay that. Third, whatever demand is there under 73, 74, then you pay. This is the chronology. First, self-assessed tax for previous month. Second, self-assessed tax for current month. Third, any tax demand under 73, 74. Hope I've clarified, Aniket. If not, let me know. I'll explain once again. Now, this was a concept in 2021 where it was a nightmare for depositing GST in cash ledger. This was a quite old concept where, see, when I deposit tax, when I deposit GST, I have to be very careful. How? I have a head called IGST, CGST, SGST. Under IGST, again a bifurcation: tax, interest, penalty, late fee, others. So any tax you have to pay. Now when you create a challan, when you create a GST challan, unlike your income tax, the beauty of income tax, so when you make this deposit of self-assessment tax, you just pay under tax, education cess or any other cess. You don't put into various minor heads. So here, this tax, interest, etc. is called minor head. This nature of ICS is called major head. This is major head, this is minor head. So I have to be very careful. Under IGST, penalty of 10 rupees. Under CGST, penalty of 5 rupees. Under SGST, penalty of 5 rupees. This is how I have to deposit. By mistake, erroneously, in a hurry, what I do, instead of paying and depositing 10 rupees here, I deposited 5 rupees here, I deposited 10 rupees here. Under till 2021, where this form PMT09 was not notified, I have to claim a refund with the GST officer for whatever mistake I have done. It was a nightmare all along. Later, the GST department have brought PMT09. I can transfer from one head to another head easily, whatever I want. Later, in 2022, they made one more amendment, transfer among distinct persons. That means a person having same PAN in state 1, a person having another PAN in state 2, I can transfer money available in cash ledger from state 1 to state 2 or state 2 to state 1. I can play around transferring of money. This was a provision what they have brought in. Then, utilization of input tax credit. This IGST we have discussed. Order of utilization. IGST we have discussed. IGST first will be used for IGST. Remaining amount I'll use it for CGST, SGST or UTGST in that order. This also we have discussed. Electronic credit ledger, I have explained in detail this input tax, whatever I have, like credit entry. Now, this is where my accounting, my input tax as per books, claim of ITC by way of purchase. When I purchase goods, I will claim input tax credit. Rejection of refund. I filed a refund application, my refund was rejected. Then again, that amount gets credited to electronic credit ledger. Refund of erroneous or excess tax payment. Any tax I have paid through credit ledger, again, that will be refunded back to credit ledger. So these are the ways where money will get credited. Debit, that is payment. Discharge for tax liability for current month. Claim for refund of accumulated tax. So when I claim a refund from credit ledger, this refund will come into cash of our, now I'll say bank account. Bank account. I gave example of ITC accumulated. ITC accumulated. So any ITC accumulated, first it will be debited in my electronic credit ledger and that will be shown as a refund in my bank account. 86A, this is a mechanism where my commissioner or a proper officer under GST law have a reason to believe that this ITC was taken fraudulently. I gave an example of steel trader, right? Where Namrata sold to Aniket, Namrata sold to Rahim, Rahim sold to Aniket. Where, assuming for a moment, Rahim's supplier Namrata defaulted. Now, GST officer believes that because Namrata defaulted, they'll block credit of Rahim. From Rahim, they'll also block credit of Aniket. This is a new trend which came because of Rule 86A. Not relevant, but we have to prove the genuineness to the GST officer to get this blockage opened up. So they say that the credit of input tax credit, where it was taken under Rule 36, issued by a registered person who is not existing or not doing any business. Like example, Aniket said, 3 virtual registrations. 3 people took a registration. None of them were available in that registered premises. Or the input tax credit was taken without receipt of goods. Or the tax charge has not been paid to the GST office. The registered person availing the credit is not found to exist. It is a sham transaction. The registered person is not having the documents prescribed under Rule 36. Any of these reasons, the input tax credit will be blocked, saying that I'll not allow you to utilize. I'll not allow you to utilize this particular amount. And in case if the officer is blocking that particular credit, the commissioner officer may, upon being satisfied that conditions for distilling debit of credit ledger no longer exist or it is not required, within a period of 1 year, he will allow you to use that particular block credit. Here, the law says that prove to the satisfaction of the GST officer that the seller is existing. The seller has paid the tax. The seller is conducting the business and the goods have been received. I have been conducting business regularly. When all these conditions are proved, then the blocking of credit will be unblocked. And the moment unblocked, it is the ITC is unblocked, I can utilize this particular block credit. Cash ledger, we have discussed this. Section 50. Payment of interest. I'll quickly, I'll elaborate. Let me just add one slide. Students, we are at 8:57. I'll prolong by another 10 minutes so that I'll complete entire section 50. If we stop, you'll not get the continuity of this. Section 50 deals with interest. So here they say that if there is any default for payment of tax within due date, then there's a loss to revenue. When there is a loss to revenue, this is compensated by way of interest. Now, this is what the common expectation under tax laws. Common expectation under tax laws. Now here, when you examine output tax, my output tax can be paid through using cash ledger or credit ledger. Cash ledger or credit ledger. I'll give a classic example where we apply these provisions and how we apply these provisions. My example goes this way. Assuming the service provider is a civil contractor and service recipient is a government entity. Month 1, work is completed. Say for rupees 100 lakh. For rupees 100 lakh. Month 2, RA bill approval received. Means they say please raise a RA bill. Month 4, accounting is done by registered service recipient, that is government entity. Month 7, payment is given. Payment is made by service recipient. Now, I'm talking about a small MSME business person. On 100 lakhs, assuming 12% is the GST. My GST happens to be 12 lakhs. Now, when you look at the cost breakup, my purchases, my labor, and my profit margin. My purchases is for 60 lakhs. My labor is for 20 lakhs. And my margin is for 20 lakhs, which comes to 100 lakhs. This is what I have built to my client. On 60 lakhs, 7.2 lakhs I have paid as input tax credit. On 20 lakhs, assuming 20 to 18, not 18, say 1.8 lakhs I have paid as purchase tax. And margin, there is no input tax credit. My total input tax credit happens to be 9 lakhs input tax credit. This is input tax credit. What is my sale value? 100 lakhs. This is my purchase related or input tax. My output tax on 100 lakhs happens to be 12 lakhs. This is my output tax. Gap. 12 lakhs minus 9 lakhs, 3 lakhs. Now here, the plight of this contractor, civil labor, he purchases raw material, he purchases labor, and he does the work. Waiting for 7 months, the payment is made by the government. Now, left with no choice, the contractor doesn't have money to pay this tax. So, assuming return for RA bill, month 2. Return for month 2, file during month 7. There is a gap of 5 months. There is a gap of 5 months. Section 50 has taken this into consideration and said, look, because 9 lakhs is available with government. How is it available? This seller who sells the goods, this labor contractor who gave services already have paid this GST to the government. Only 3 lakhs is where it is paid through cash ledger. Government said under section 50, subsection 1, interest has to be demanded only on tax paid through cash ledger. Interest should not be demanded on tax paid through cash credit ledger. I summarize this here. Under section 50, subsection 1, interest to be paid only on cash portion and not on credit amount. Now, this makes a sense to you? This is what GST law says. Section 50, subsection 1, calculation of interest. Exception for this. Exception. The GST law says that if at all, if tax is paid after audit under section 65 or demand notice is given under 73 or 74. Look, only when the GST officer have conducted the audit, they said that this is the amount you should pay but not paid. After that, you are paying tax. Then on entire amount, interest is collectible. Demanded. That means to say, tax is paid after 65 based on 73-74. GST department says that you are a willful defaulter. Means you have intentionally not paid tax. Because you have intentionally not paid tax, your output tax paid through cash and credit will be subjected to interest under section 50, subsection 1. This is what GST law has said. Let me see any doubts. Aniket, clear, still confused in deeming fiction. Which aspect, ma? Deeming fiction. Clear, still confused in deeming fiction. Okay, okay. Now, deeming fiction is that for order of payment of tax, ma? If you can clarify, if you can mention, I'll explain once again. Aniket says, the logic for 50 subsection 1, amount available in credit ledger is available with the government. That's why government is not asking interest. This is the logic for 50 subsection. You're right, Aniket. I completely agree with you. This is what is discussed in 50 subsection 1, except pay tax paid under 73/74. Next. This is a amendment happened in 2022. Wait and watch for March 2024 attempt, May 2024 attempt. Now, there's a interest, this 50 subsection 3 is a latest amendment under GST law. I'll just explain this. Just let me insert one more slide. Okay. There's some problem with the slides. Let me introduce one blank slide. Okay, I think the slide is deleted. I'll just explain this one. '50 subsection 3. 50 subsection 3, where ITC has been availed and utilized. Then demand of interest. Demand of interest. I'll give you an example. I think better I'll insert one slide, then it will be easy for me. Yeah. Say, month ITC actual, ITC availed. So ITC actual, ITC availed. ITC closing balance. ICS. 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 Assuming that month 1, my ITC actual as per bills is 100 rupees, 50 rupees, 50 rupees. I have availed 120, 60, 60. My closing balance will be 120, 60, 60. Month 1 output tax is 20 nil nil. So I'll be using that 20. So balance will be 100, 100, 60, 60. Month 2, my actual credit is 120, 40, 40. And my availment is same, say 120, 40, 40. ITC closing balance 100 plus 120, 220. 60 plus 40, 100. 60 plus 40, 100. My output tax for month 2 is assuming, say, 200, 100, 100. Now, If you see month 1, 100 is actual, but I have availed 120. Why did I do that? Clerical mistake. What is the gap? For month 1, there is a gap of 20 rupees. If you look at month 1 closing balance, my month 1 closing balance is 100. My closing balance is higher than error. Since my closing balance is higher than error, no interest. Now let's look at month 2 closing balance. Out of 220, I have used 200. My closing balance is 20. Out of 100, I have output tax 100. I used entire 100 CGST, entire SGST 100. Now here, my input tax under CGST, if you look at here, there is a gap of 10 rupees. For month 1, closing balance is, okay, for month 2, I'll say closing balance. After utilization, my closing balance will be, out of 220, I have used 200. Out of 220, I have used 200. Balance is 20. Out of 100, balance is nil. Balance is nil. This is my closing balance for month 2. Now, closing balance for IGST is equivalent to clerical error. IGST. For CGST, my closing balance is 0. Error is 10 rupees. That means I have utilized the credit. Since I've used the credit, pay interest under section 50, subsection 3. This is what provisions of 50, subsection 3 talks about. Erroneous availment and utilization. So, if you have availed input tax credit wrongly, this is the way you examine and calculate whether interest is payable or not payable. Students, we are at 9:12. I have concluded my provisions of section 50. There's only one concept called TDS, TCS left over. In the next week, when we start with our chapter on returns, I'll cover upon this aspect called TDS and TCS under GST law. Till then, good night, goodbye. See you all.